Once again, we just did the work, we sent out the invoice. Cash isn't affected, but we did work, and therefore we have an IOU. They owe us money, and we're going to record that. So we're going to say they owe us money. And accounts receivable, the account represents people owing us money, has a debit balance. They owe us more money, needs to go up. How do we make something go up? We do the same thing to it, which in this case would be a debit. Debits generally go on top. If we post that debit first and put in the 5/6, we know that we're going to have to credit something because we have an equal number of debits and credits at all times. And what's the credit going to be? Well, why do people owe us money? Because we did work. And when we do work, that's when we earn revenue. So we recognize revenue when we do the work, not when we receive the cash necessarily. Therefore, the credit will go to the revenue recognition, the revenue account, which is computer service revenue in this case, has a credit balance. Credits, it only goes one way, it only goes up. How do we make something go up? We do the same thing to it, which in this case would be another credit. So we're going to credit the computer revenue account. Going to make this large, going to post this out. We can go to accounts receivable in P38 equals, and then point to the accounts receivable over here in C43. So there's the formulae, selecting that, and then if we go to the revenue account, notice we only have credits in revenue. That's all we're going to have in revenue accounts. They only go one way. We can actually eliminate one side of the T account if we wanted to do that and make it like a backwards 7 account or an R account. And then I'm going to point to this selection here. So D44 is going to make revenue go up. What happens to net income? Well, revenue went up. It makes net income go up because net income is calculated by income minus expenses. Now I'm going to open up some of these cells. So notice I want to see the other cells so we don't have to go way down here to post these transactions. We're going to go to the ones next to it. So I know there's some hidden cells because it says A, B, C, D, E, K. So it's out of thing. And so I'm going to highlight my cursor here on the D, hold to the K, let go, right click on the highlighted or selected columns, and unhide. And then if we want to get these out of the way, just so we don't have this over here, we could go to column E, which is really skinny, so make sure it's not like that, it's like that. Left click, and hold down to A, let go, right click on the selected or highlighted area, and hide. And so then if we do that, we can continue on with 1031. Okay, so I'm going to move this to the left-hand side. Once again, we're on 1031. It says that the company paid $1,100 cash to Lynn Addy's wages for the 7 days' work. All right, so it's cash affected. Yep, cash is going to go down because it says paid. How do we make something go down? We do the opposite thing to it, which in this case would be a credit. Cash is a debit balance. We're going to make it go down by crediting, putting the credit on the bottom because that's where it traditionally goes, -1100. If we credit something, we're going to have to debit something as well. And if I look at our account, what's going to be something related to wages? And we can see down here it's wages expense. So we have wages expense, which makes sense because we consume the use of something in order to help us generate revenue, which is the definition of an expense in the matching principle. Expenses all have debit balances. We need to make it go up because expenses only go up. The employee never pays us. So how do we make it go up? We do the same thing to it, which in this case would be another debit, which of course we already knew because we credited cash, which is why we credit cash and think about cash first most of the time. So then we're going to make that large. We're going to look for wages expense over here. So wages expense is down here on AB35. So AB35 equals, I got to scroll up a little bit, and I'm going to point to H6. And then when I hit enter, so this cell, you can see it there, enter, then it goes up, wages goes up here, wages went up here. It made net income go down because we still have income represented by the credit, and the revenue is beating the expenses. So then we're going to go to cash over here as a credit in R17 equals, pointing to the credit here. When we select that, going to make the balance go down in the cash count, put it back in balance over here. All right, going to take this, going to pull it to the left again. We are now moving on to 1031, which says that S-Ray withdrew $3,000 cash from the company for personal use. So once again, is cash affected? Yes, it was withdrawn from the company, therefore it's going to go down. How do we make something go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to credit the cash, 3,000. We're going to debit something for 3,000 because the debits have to equal the credits. Who drew it out? Ray drew it out. Who is Ray? Ray's the owner. So that would sound like it has something to do with owner's equity down here. Owner's equity are these two accounts, and what we're talking about are withdrawals in this case. So notice that owner's equity, basically the total here, has a credit balance, and we're going to reduce the amount that is owed to the owner. So if we think of the owner in aggregate, it's a credit here, represented by the accounting equation here. We owe the owner 88.8, and we need to make it go down, so we're going to kind of do the opposite thing to it. So this is a funny account because the draws are going to go up. Withdrawals goes up in the debit direction, but it's kind of like a contra equity account because it's going to be this amount minus the draws. So therefore it's going to be a debit in this case, which we already knew because we credited cash. So I'm going to do that, and then we could post this out. So I'm going to make this large once again. We're going to look for the draws account, which is right here in AB15 equals, then point to H9 and enter. So there's draws goes up, and now we say the 80 minus the draws is the 77.2. And really we're going to add to that all the income. So really at the end of the day, it's 88.8, 88.8. So then we're going to go to the cash here, and we are going to credit cash. So we are in R18 equals, and we can then point to I10 and enter. Okay, so then I'm going to pull this, going to pull it to the left once again, and we're moving down to now 11.1. 11.1 says the company reimbursed S. Ray in cash for business automobile mileage allowance. Okay, so we're going to reimburse for the mileage allowance. So we reimburse, I'm assuming, with cash. So is cash affected? Yes, cash has a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. So I'm going to put that on the bottom. So in this case, that we're saying basically that we used the personal car and we're gonna reimburse for it. So the cash is going to go down. We're going to charge by mile here. So I'm going to say equals. I'm going to put equals in the cell. That will allow me to use it like a calculator. 1,000 times 0.32. So enter. There it is. Now that's a positive number, and I want to make it negative. So I'm going to double click on it again, go back into it, and I'm going to make that first one a negative 1,000. So it'll represent a credit for our purposes here. Then enter. Now we've got a negative 320. How? 1,000 times 32, credit 320. Then we're going to have to debit something. And why did we do this? Well, we did it related to the auto in some way. And if we look at our accounts here, you would think you would have an auto expense down here. And it looks like we do. They actually called it mileage expense. So, you know, I would call auto. And selecting the type of expense that you're going to put down here is obviously up to the bookkeeper as well. We can name them different things. So we got the mileage expense, and we know that all expenses here have debit balances, and we're going to make it go up because expenses only go up. They only go one way in the debit direction, and therefore we're going to do the same thing to it as what it is, which in this case would be a debit. So I'm going to right click, paste that 1, 2, 3. Notice that if expenses go up, it makes net income goes down, and we will see that effect here as we post this. So we're going to go to the mileage expense. It's on AH16 equals. Then I'm going to point to cell H12. So there it is right there, and I'm going to hit enter. Goes up here, brought net income down here, and we are out of balance until we post the cash side in cell R19 equals, pointing to the cash account. And we'll go back in balance here. Cash will go down. We'll go back in balance here, and enter. There we have it. Okay, so then let's go to the next item. I'm going to pull this back over here, of course, and moving on to, I'm going to pull this over here a little bit, to 11.2, which says the company received 3,000 cash from Lou Corporation for the computer services performed. Okay, so is cash affected? Yep, we received it. Cash has a debit balance. We got more of it. We need to make it go up. How do we make something go up? We do the same thing to it, which in this case would be another debit. And so I'm going to debit that 3,000. That means I know I have to credit something for an equal amount. We need an equal number of debits and credits. Why did they pay us the 3,000? In this case, because we did work now. So it says that we did the work now and got paid at the same time. That means we're going to recognize revenue. We're recognizing revenue not because we received the cash now, but because this is the time where we happen to do the work in this case. And revenue has a credit balance. we're going to make it go up by doing the same thing to it, which is another credit, because revenue only goes one way, it goes up. So there's a transaction. Notice there's nothing bad about this transaction. This is like our favorite transaction. Cash went up and revenue went up. So the credit's good and the debit's good. So I'm going to make this large, going to post this out, see what happens to our net income as we do so. If we go to the cash account on cell R20, and the debit about that area, which is on P20, equals the debit on H15 and enter. Then we're going to go to computer service revenue, which is over here. Notice there's only credits in computer service revenue because it only goes one way. It goes up. Going to say equals. Going to point to the I16 and enter. And their revenue goes up, which makes net income go up, puts us back in balance, puts the accounting equation back in balance, and we're good to move on to the next one, which is on 11.5. So 11.5, the company purchased computer supplies for, I'm going to call that 1,000. Cash, okay, so we got computer supplies. So is cash affected? Yes, we purchased it for cash. Cash is a debit balance. We got to make it go down by doing the opposite thing to it. It's a debit. Opposite would be credit. Credit goes on bottom. So we're going to put it on bottom. I'm going to represent it with a negative number. And then we will debit something for the same amount. And 11.5, we bought supplies. So if I look here, where is supplies on our trial balance? I see it's up. Computer supplies, I see it up here, and it's an asset. You might be thinking, well, supplies, it should be an expense. Why is it an expense? It will be an expense when we use it, when we consume it for use. So we bought it as an asset. As we consume it, we should expense it. Now, of course, if the supplies are very small, like if we bought a whole jar of paper clips that's going to last us a year, we probably will expense the paper clips. But if we bought large supplies and we want to track them as we use them, if they're significant to our financial statements, then we should put them on the balance sheet and expense them as they are consumed or used. Assets have a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. Going to make it large, going to post it out. We're looking for computer supplies, and cell V10 equals, pointing to cell H18, enter. Then we're going to post the cash. We're out of balance. Computer supplies went up. And we're going to go to cash in the credit in R21 equals the cash journal entry in I19. And that will make the cash account go down, put us back in balance here, here, and enter. There we have it. Pulling this to the left and moving down, we are now on 11.8. 11.8. Which says company billed Gomez $6,000 for service performed. So is cash affected? No, because in this case we billed it, meaning we sent out the invoice, haven't received the cash yet. What did we get instead? We did do work, and therefore we are entitled to receive in the future, near future, 30 days hopefully, receivable, an IOU. The IOU is a debit as well in the receivable account. We have more that is owed to us, therefore we're going to make it go up. How do we make it go up? We do the same thing to it, which in this case would be another debit, and the amount is 6,000. We're going to have to credit something 6,000. Why are people going to pay us money? Because we earned it, because we earned the revenue. Revenue is down here, has a credit balance. We're going to recognize it when we earned it, not when we get the cash. We're going to get the cash in the future. We're going to recognize the revenue now because we have earned it at this point. Revenue recognition principle is an accrual principle. That's a credit balance. We're going to make it go up by doing the same thing to it, which would be another credit. So same things make it go up, opposite makes it go down. We're going to post this out. We're going to go over here. We're looking for the accounts receivable. So I got to scroll down to find it. It's a debit here. I'm in the debit column in accounts receivable equals, pointing to cell H21 and equal. So that made the receivable go up here. Now we're looking for computer revenue over here. It's going to be the one with all the credits because it only goes one way. Revenue only goes up in the credit direction. Going to point to revenue. That'll make it go up again. We'll make it go up here. We'll make us be in balance, and net income will go up when I select enter like so. There we have that. Going to pull this over to the left. We're going to move down to 11.13, which says company received notification from Alex's engineer that the business solution bid of $3,950 was upcoming project is accepted. So a bid is accepted, and again, that's a kind of a tricky one, meaning we sent a bid in to do work, but we haven't done the work. Therefore, there's no entry now. we're happy that the bid got accepted, meaning we have work in the future, but we don't recognize the revenue until we have done work and thereby earned it. So we're going to move to the 14th or the 18th. And then the company received $2,000 cash from IFM Company as partial payment for the bill we sent out